Good morning, Bix Weir, roadtour.com with your morning horn of Z's, your sip of chaga coffee. Yes, keep up the chaga, keep up the vitamin C, probably for the rest of your life until they figure out a way to clear this bioweapon. It'll just accumulate in your system, harden your system. That's always been the advice of Cliff, of myself, of everybody who knows what's going on. Absolutely harden your system. It's going to be around for a long, long time. The world has changed. Okay, let's talk about a non-changing world, which is the manipulation of the price of silver over the last 150 years. Yes, 150 years of price suppression on silver. It is amazing. It is amazing that it's lasted this long. It's amazing that people believe what the powers that be tell them is the reality in silver. The latest is, the economic engine has shut down. There's no demand for silver. That's the most ridiculous thing I've ever heard in my life. Look at the volumes of silver traded on the COMEX and the LBMA. Over 100 billion ounces of silver every year on each of those exchanges. Well, LBMA is an association, not an exchange. But you get my gist. The price has nothing at all to do with the amount of physical silver that is bought and sold. Nothing. And yes, of course, manufacturing uses of silver are down right now and probably stay down for a while. But also all the mines, half the mines are shut down. Nobody's exporting. So think about it. Think about what you're hearing. Think about ratios. I'll get to that in a second. But right now, the price of silver is $15.30 and you can't buy any. The U.S. Mint is shut down making silver eagles. The Canadian Mint is shut down. The Australian Mint is shut down. The Perth Mint. Everybody's shut down because they don't have any silver. And all those mints, all three of those mints are huge derivative holders who hedge their inventories. They're saying they don't have any inventory, but they basically have naked shorts right now. Your government is naked shorting the silver market. Insane. I know. It's insane. So buy your silver now. Get it. Go to your local coin shop. Number one, that's the first place you want to go, your local coin shops. And then play them off each other. Say, hey, Joe down the street said, I can get an eagle for 20, and you're telling me it's $25. American Eagle. Yes, silver eagles. If you can find them under 20 bucks, buy them. All right. Let's take a look at spot silver. Now, it's a little interesting because this is a 35-year chart. 35? It's a long chart. This chart goes back to the time when we went off the gold standard. We went off the silver standard. It wasn't a silver standard. We demonetized silver back in 1965 when they finally took the silver out of circulation as money. The quarters, half dollars, mercury dimes, they all had silver in them up until 1965. After they killed Kennedy, they took the silver out. Surprise, surprise. So everything after that was all about market manipulation. And in 1972, I think it was, they invented the COMEX, or they created the COMEX out of a couple different exchanges, and the CFTC to regulate it. That's when the real market manipulation started, and you can see right here, around $5, they held the price below $5 until the Hunt brothers cornered the market. Now, Hunt brothers cornered the market with 105 million ounces of physical and 110 million ounces of long contracts on the CME. Was it called I think it was the Chicago Mercantile Exchange back then. It's the COMEX that we have now. And then the government came in and said, "You're rigging the silver market. You're trying to corner the market," and basically they crashed the price from $50 back down to the $5 that they held it for a long, long time. A long, long time. But it's all been computer market manipulation. All this crap, all computer market manipulation. It's got nothing to do with physical silver. It's been a rigorous wet dream having electronic markets that you don't need the real thing to trade. And I think that's breaking down right now. So they held it very firmly from about the mid-1980s. That's when Ted Butler started understanding and finding the manipulation in silver based on the data given by the comics. So those were some tough years for Ted Butler. I think it was 87, 88 that he got into silver, and it just didn't do anything until after the dot-com bust, 2003 timeframe, 2004. That's when I got in. It started going up. It must be all me, right? Started going up, but massive manipulation, massive. And then in 2011, we have this huge spike. What that was Jamie Dimon and the guys who took over the Bear Stearns gigantic naked short, which was controlling the price of silver, decided to run the price up from $25 to $50 and then slam it down and create an artificial bear market. I wrote articles about this before it was happening. I said, oh no, this guy Bill Daley was put in as Obama's chief of staff to rig the silver market in 2011. He came in, they rigged it up to $50, they slammed it down, basically destroyed all the little guys who bought silver on margin. Dumb move in the first place. And it created a bear market and has been controlling it ever since. I wrote an article called Operation Silver Slam and outlined exactly how it was done. It's very easy to do on the comics because they don't trade silver. They trade silver derivatives. There is no exchange on planet Earth right now that trades physical silver. There isn't. And don't tell me the LBMA, they do over 100 billion ounces a year. There's only been 60 billion ounces ever mined on planet Earth. So, no, it is not a real silver market. It is a fraud. So there we are. This is the bigger thing. I want to talk about this real quick. This is a gold-silver ratio over the last 100 years. Look at it. Now, you got to keep in mind that the prices in the beginning, all the way up until the 1970s, they were fixed prices. They fixed the ratio. The ratio was set at 20 to 1 or 30 to 1, and it changed. But it was fixed. It wasn't a fair market value type of thing. It wasn't until the 1970s, early 1970s, that gold and silver, gold was allowed to trade freely. And silver completely rigged. Just completely rigged. But look at this ratio. Now, you might think, well, Bix, that especially in the early days when they were fixing it, they just changed the fix depending on how much they had. And this is in the U.S. Other countries did a different thing with their silver as far as the fix. But you look at like the 1916, 17, 18. In 1919, the ratio was 17 to 1. Coming out of the ground, it's always been about anywhere from 8 to 1 to 15 to 1 coming out of the ground. Here's some interesting things I want to show you right in here. In 1930, the ratio just jumped right in here in the 1930s. Why? That's because all that hanky-panky was going on with gold. The Great Depression, the gold confiscation, then they changed the price to $35 an ounce after they stole everybody's gold from $20 to $35 an ounce. That's what all this is. So you don't even have to look at that. And then it came down from 1940 all the way to 1967. The silver-gold ratio came down. And why is that? Because silver in the industrial world became more valuable. Absolutely. And all the silver they needed for the Manhattan Project to build the calutrons to make the first atomic bomb. That was in the 40s. So silver became more and more valuable. Ultimately down here in 1967, that's when they basically stopped. They said, oh my God, we can't put silver into the money because silver is too valuable. And I think it bottomed out back then at 15 to 1, which is where it probably should be based on what comes out of the mouth and out of the ground and how important it is. Silver, our modern society will not function without silver. Gold, yeah, it'll go on. You dig up an ounce of gold and you stick it in a vault and you bury it in the ground again. I agree. Silver is not like that. Silver is both a monetary metal and industrial metal. So then, this is when market rigging started in the early 70s, right? All of a sudden, silver became less and less valuable until right here, again, 1980, the Hunt brothers, who only had, theoretically, 200 million ounces, 100 of physical and 100 of COMEX contracts, and the government shut it down. Today, JP Morgan has over 1 billion. Why haven't they been shut down yet? Because it's rigged. The whole game is rigged. It's bullshit. Anyway, over the last 100 years, look where we are now. Here's where we were. This was the highest ratio ever back in 1991. It was almost 100 to 1. Everyone's going, this is out of control. This is ridiculous. Pure market manipulation. But look where we are now. 110 to 1. Now is the time to buy silver. Now is the time. If you have any gold, gold fillings, you should be swapping it for silver. No, you won't be able to get the 100 to 1 because it's a fake number, but you'll get a good number. You'll get a good number for your gold. And then when this thing flattens out to where it should be, now where should it be? If this is all bullshit, where should it be? Up until here, everything was fixed. Up until here, everything was rigged with computers. Here's it's a little bit older article by Ryan Jordan, 2011, but the ratios are kind of the same. In short, if you're going to use gold-silver ratios, you may want to think about possible relevance of these other ratios. 9 to 1 is the ratio of silver to annual gold mine production. So that makes sense, right? How should we value gold and silver? How about pulling it out of the ground, somewhere around 9 to 1? 6 to 1 is the estimated ratio of economic gold to silver in the ground. That's the silver at a given price. It's economic to pull it out of the ground. So 6 to 1, right? 5 to 1 is the estimated physical ratio of all silverware, silver, gold, jewelry, and other stocks above ground. I think it might be right. I would say in sellable form. I think there's 6 billion ounces of each around there, so it's more like 1 to 1. But if CPM Group says so, it must be right. It doesn't matter. If it's 1 to 1 or if it's 5 to 1, the ratio is well below the 100 to 1, 110 to 1 it is right now. 1 to 1 is the year-to-date ratio of investment dollar demand. That's pretty much stable. I think gold is bumping up there, but still, massive amounts of money goes into silver. And when you compare that to gold, it's insane. The ratio should be around at least 4 to 1, in my opinion. And 1 to 3 is the physical ratio of gold and silver and bullion coins. Yes, massive amount of silver coins compared to gold. All these ratios probably should be taken into account. And what we should not take into account is the rigged price. That's the only thing that's completely out of whack. The rigged price puts 110 ratio on. Basically, the world is saying, you get cheap silver. Cheap silver. And if you hold gold, you're crazy. Wait till they find all that gold in the Grand Canyon, all the gold in California, Chocolate Mountain, all the areas that Dianne Feinstein locked up in the federal desert wildlife. Massive amounts of gold. There's gold everywhere, all over the place. But there's very little silver, and silver is so much more important than gold. Our lives would change if silver is not available, and all the silver mines have shut down. Brilliant move by all the countries that are mining silver. Do not export your silver ever, ever, ever again, especially for fiat money. Okay, now we come to, so Trump end of last week opened up, said, okay, we have a way to get back open. And it turns out we're not going to be open. We're not going to be, whatever opens up will be completely different than what we had just a couple months ago. And there's so much fraud going on in the loan, the federal grants to small and medium-sized businesses. The banks are giving huge payouts to large companies that they have customers for. No, they hold as customers. So let's take Shake Shack, who borrowed $110 million of the payroll, personal payroll loan, Paycheck Protection Program. That's to keep employees, right? It's supposed to be if you have 500 employees or less. They have way over 500 employees at Shake Shack, and they got a loan. Why? Because they owed their bank money, and so they go to their banker and say, "Get me that. I'll pay you off what I owe you, and I'll keep the rest." It is insane what's being allowed. And Shake Shack gets in trouble for it. They got a $10 million loan when they didn't qualify. It should be the bank that got in trouble for it, but the Shake Shack paid off their bank. And that's happening all over the place. It's insane. Right now, it is very profitable to be a criminal bankster because all the rules are out the window. And these are companies that were making last year, made billions, and gave their top executives huge payout bonuses. I was screaming about it last year. Everything's about to fall apart, and they're paying out these gigantic bonuses because Steve Mnuchin and Donald Trump rigged the stock market and higher, and higher. Just keep rigging it higher. They get their bonuses, then they run away. They retire at the end of the year, get their bonuses, and they're done. And let the entire company implode. According to the SEC filing, U.S.-based burger chain, which employs 45 employees at each of its 275 locations, way over the allotment of 500 employees, received the $10 million on April 10th through JP Morgan. Now, what we need to find out is, did Shake Shack make any payments to JP Morgan after they gave them the money? If they did, there you go. That's what's going on. Well, they owed it to us. Yeah. How come Shake Shack got in front of the line compared to everybody else out there? Because JP Morgan knew they were going to pay back their loans first because they got the promise from Shake Shack. I'll move you to the front of the line if you pay back your payment for the last 3 months that you're overdue, or 2 months. Right now, the company's facing operating losses of more than $1.5 million per week. Shake Shack made an operating profit of $128 million on revenues of $595 million in 2019. According to the National Restaurant Association, 417,000 restaurant employees lost their jobs. And they all got paid bonuses at the end of the year. It's insane. It is insane. And what's the stock market doing? Nothing. 24,000, massively overvalued. I don't know if that'll ever change. They might just stop the system. Computer models trading against each other, high frequency trades back and forth, and everything just gets stuck. That's probably what's going to happen if you ask me. Anyway, there's your update for the morning. Lots more going on this week. I will be talking to Snippy about treasures in the Grand Canyon and treasures throughout the Southwest and the remote viewing stuff that crypto viewing did for us. And we're going to discuss that this week. It'll be really cool. And we'll have a kiss and make up session. Anyway, this is Bix. I'll talk to you later.